Every time I talk with and introduce dividend growth investing to people who are looking to improve their financial life, 3 out of 5 ask, is it really possible to live off dividends? The idea of not needing to live on paychecks already sounds like the ultimate financial freedom, but can I make enough to meet my needs? Let me begin by saying that it's possible to cover your expenses with cash flow from dividend income. Let's do the math. If you spend a total of $50,000 each year, all you need is a $1 million investment in a stock with an average dividend yield of 5% to take care of your living expenses. And if you invest more, you'll be sure to have some reserves for the future. But this also means that if you're making an average yield of 5% each year with living expenses running in hundreds of thousands of dollars, you'll need a much larger portfolio to meet up. This is where some people tend to lose their excitement. Well, that's why we've put up this video to show you the fastest way to achieve financial freedom and live off dividends. If you're ready to learn these tips, keep watching. But first, what is a dividend? See, a dividend is a reward from a company to its shareholders for their investment in the company. The corporation distributes a share of its profit to its shareholders either in form of cash or additional shares of stock. Dividend payments represent a stable source of passive income since you're entitled to a regular payment for holding a percentage of the company's stock. For example, suppose you buy 200 shares of ABC Corporation for $30 per share. You'll have a total investment of $6,000. Let's say that the company pays 30 cents per share monthly. That's 1% of the dividend yield. In this case, you'll receive $60 a month and in a year, $720. One great thing about dividend investing is the potential for dividend growth. Investing in dividend stocks allows you to share in the company's profits while also maintaining ownership of your investment. And since most dividend-paying companies are established, their stock prices tend to increase over time as their perceived investor value continues to grow. So if the ABC Corporation stock increases to $50 per share, that means you'll make a $20 profit on each of your shares if you decide to sell. In addition to this capital gain, your yearly dividend will increase to $1,200. Also, if you decide to take advantage of compounding by using your dividend earnings to purchase additional shares of company stock, you'll earn more money. The initial investment generates a certain return that you can reinvest to produce greater returns, and so on. Every share you purchase earns its regular dividend payout. So what is the fastest way to live off dividends? First off, setting a financial goal is critical to achieving financial independence through your dividend payments. By knowing how much money you need to live on each year, you can calculate how much you need to invest to generate the amount of income. For example, if you need $50,000 per year to cover your living expenses and you're investing in stocks that pay a 2% dividend yield, you'll need a portfolio of $2.5 million to generate that amount of income. In addition to setting a financial goal, it's crucial to have a plan in place to achieve that goal. This includes a timeline, investment strategy, and asset allocation plan. You should consider consulting with a financial advisor to help you develop a plan that aligns with your goals and risk tolerance. Another crucial factor to consider when setting your financial goal is inflation. Historically speaking, inflation ranges around 2% each year, and that means your cost of living is going to increase by 2%. Therefore, it's important to factor in inflation when setting your financial goal and adjust your investment strategy accordingly. You also need to develop a mindset for dividend investing. What does this mean? It simply means embracing the idea that you can generate a steady income stream from investing in high-quality dividend-paying stocks and funds. You can already tell that this is a crucial part of the process. This mindset shift can be a game changer for many investors. Rather than focusing solely on capital appreciation or short-term gains, dividend investors prioritize long-term income generation. They seek out companies with a history of paying and increasing dividends, often referred to as dividend aristocrats, that have a strong track record of financial performance and are well-positioned for future growth. Embracing a dividend investing mindset can also help you stay focused and disciplined during market volatility. When the stock market experiences a downturn, many investors panic and sell their investments. But dividend investors understand that the value of their investments may fluctuate in the short term, but the income generated from dividends is likely to remain stable. This can help you weather market downturns and stay the course of your investments. A second benefit of a dividend investing mindset is that it can be a more sustainable and responsible approach to investing. By focusing on high-quality companies with a history of dividend payments, you're investing in companies that have demonstrated their ability to generate consistent profits and are likely to be around for the long term. This can help you avoid the risks associated with investing in trendy, speculative companies that may not have a proven track record. By prioritizing income generation over short-term gains, staying disciplined during market volatility, and investing in high-quality, sustainable companies, you can create a portfolio that can provide a stable income stream for years to come. So if you want to achieve financial independence and live off of dividends, you'll need a simple mindset shift. Another thing you should consider doing is building a diversified dividend portfolio. This means investing in a variety of stocks and funds that pay dividends from different sectors and industries. Diversification is crucial because it helps to reduce risk in your portfolio. By investing in a variety of stocks and funds, you can spread your risk across multiple companies and industries. This means that if one sector or industry experiences a downturn, your entire portfolio is not likely to be impacted as severely. Building a diversified dividend portfolio can also help you take advantage of different market trends and opportunities. By investing in companies from different sectors and industries, you can benefit from the growth potential of different parts of the economy. For example, you may choose to invest in both technology and healthcare stocks to benefit from the growth potential of both of these sectors. Another benefit of a diversified dividend portfolio is that it can provide a more stable income stream. By investing in a variety of dividend-paying stocks and funds, you can spread your income across multiple sources. This means that even if one company reduces or suspends its dividend payments, your overall income stream is not likely to be impacted as severely. One common approach to building a diversified dividend portfolio is to invest in dividend-focused funds, or ETFs. These funds invest in a variety of dividend-paying stocks from different sectors and industries, which can produce a more efficient way to achieve diversification. However, it's important to note that building a diversified dividend portfolio requires careful research and analysis. You need to choose high-quality companies with a history of consistent dividend payments and strong financial performance. This will require you to analyze financial statements, evaluate management teams, and stay up to date with market trends and economic conditions. By doing this, you can reduce risk, take advantage of market opportunities, and provide a more stable income stream. While it requires careful research and analysis, the potential benefits of a well-diversified dividend portfolio are well worth the effort. You also want to reinvest your dividends. You want to use the income generated from your dividend-paying stocks and funds to purchase additional shares, rather than taking the income as cash. Reinvesting dividends is a powerful tool for long-term wealth accumulation. By reinvesting your dividends, you can take advantage of the power of compounding. Compounding occurs when your earnings generate even more earnings, which can lead to exponential growth in the value of your portfolio over time. For example, let's say you invest $10,000 in a stock with a 3% dividend yield. In the first year, you would earn $300 in dividends. If you reinvest that $300 and the stock price remains the same, you would own an additional 30 shares of the stock. In the second year, you would earn $330 in dividends. And if you reinvest that income, you would own even more shares. Over time, the power of compounding can help your portfolio grow exponentially. Reinvesting your dividends can also help to boost your income stream over time. As you accumulate more shares of dividend-paying stocks and funds, your dividend payments will increase. This means that over time you can generate even more income without having to make additional investments. Another benefit of reinvesting dividends is that it can help to reduce the impact of market volatility on your portfolio. By reinvesting your dividends, you can take advantage of market downturns and purchase additional shares at a lower price. This can help to lower your average cost per share and increase your potential for long-term gains. Of course, there are some potential downsides to reinvesting dividends. One downside is that you may miss out on the opportunity to use the income for other purposes, such as paying bills or funding other investments. Additionally, if you're relying on your dividend income for living expenses, reinvesting your dividends may not be the best strategy. In summary, reinvesting your dividends is a powerful tool for long-term wealth accumulation and income generation. By taking advantage of the power of compounding, you can grow your portfolio exponentially and potentially increase your income stream over time. While it's important to consider the potential downsides, reinvesting dividends is a key strategy for investors who want to live off dividends and achieve financial independence. Beyond reinvesting and building a diversified portfolio is the ability to maintain a long-term investment perspective. This means focusing on the long-term growth potential of your portfolio rather than the short-term market fluctuations. One of the key advantages of investing in dividend-paying stocks and funds is that they tend to be more stable and less volatile than non-dividend-paying investments. However, it's important to remember that all investments carry some level of risk and there will always be some level of market volatility. The key to maintaining a long-term investment perspective is to focus on the underlying fundamentals of the companies and funds in your portfolio. This means looking at factors such as financial performance, management quality, competitive advantages, and industry trends. By focusing on these factors, you can make more informed investment decisions and avoid getting caught up in short-term market fluctuations. Another important aspect of maintaining a long-term investment perspective is to stay disciplined with your investment strategy. This means sticking to your investment plan, even in the face of market downturns or unexpected events. It can be tempting to make impulsive investment decisions in response to short-term market movements, but this can lead to costly mistakes and negatively impact your long-term performance. One of the most effective ways to maintain a long-term investment perspective is to use a dollar-cost averaging approach. This means investing a fixed amount of money regularly, regardless of market conditions. So instead of investing a lump sum of $10,000, you can invest $1,000 every month. This can help to reduce the amount of market volatility on your portfolio and help you stay disciplined with your investment strategy over the long term. Dividend investing can be the key to a peaceful retirement or a secure financial future, since a one-time investment can generate income for your lifetime well-being. But it's important to remember that living off dividends requires patience and discipline. It's unlikely that you'll be able to generate a significant income stream from dividends overnight. Instead, it will take some time and effort to build a well-diversified portfolio of high-quality dividend-paying stocks and funds. However, if you're patient and disciplined in your approach, you can achieve financial independence and live off dividends for years to come.